Everyone, welcome back. Today we are looking at Pantera. So Pantera Technology and C&A Modus, a major global fashion retail chain, have unveiled a new collaborative integrated management flow system built upon the Pantera Foundry platform. This software will benefit C&A by improving assertiveness and enhancing the agility of their inventory controls. With notifications to record best-selling items, in this way, it will optimize the company's supply chain. A data analysis firm based in Colorado, co-founded by billionaire Peter Thiel, is advising on proposals to reduce their UK workforce of around 75 people. This would represent a reduction of just over 8% of its total personnel, as revealed by the company. So I've never spoken about Pantera before, but it seems like Twitter have been talking about Pantera for a while now, and I've looked at the share before, and it looks like it seems to be a technology company. I happen to love technology company. Any company that works on technology, software development, building programs, anything to do with robotics, if that's AI or if that's manual robotics, I'm interested in. So on Monday, ARK Invest, owned by Cathie Wood, added about $4 million in Pantera Technology shares to multiple funds. The ARK Innovative ETF, ARK FinTech ETF, and ARK Next Generation ETF all made sizable investment in Pantera. Together, they bought around 340,000 shares of the company, worth $2.9 million, $642,000, almost $500,000, respectively. So Cathie Wood is making major movements, and Pantera price have been going absolutely crazy. So Twitter has been going wild, and I wanted to write an article. I wanted to learn more about this company. I don't intend on investing right now, to be honest, but it's a technological company. I love technological companies, especially if it's software orientated, AI orientated, building programs. We need those things for the modern world, so it's essential. So last Wednesday, ARK Invest added 1.26 million shares of Pantera across several of its funds. This was followed by the stock price 50% surge right before the company reported its earnings, which had multiple takeaways. Not only did Pantera reveal a second consecutive quarter of GAA productivity, but they also foreshadowed their upcoming involvement in artificial intelligence projects as well. Still, some analysts noted some negative indicators in their reports. So I might want to look into that myself, read the annual report, read the quarterly reports, of course. Understand what this company is doing. This company is not cheap. They're worth over $25 billion. For a technology company that's worth around $25 billion, I would have to invest at a careful rate. This is not Microsoft. This is not Apple. There are also technological companies that are worth trillions. But what I know about Pantera is that they're relatively new, and that's not a bad thing. But I certainly want to learn more, because if it's only $25 billion, that can be good or bad, depending on how well the company can do in the future, depending on how well the company can be managed. Does the company have good managers? That's what I want to know. When I buy a business, I don't want to be worried about the management. I don't want to do the hard work. I can't control the company. I just want to buy into a good business that's going to be correctly run, just like Warren Buffett. As the principle, we do have a quote from Bruno Ferreira, Planning and Business Intelligence Director of C&A Brazil. And I quote, "We're the first Brazilian fashion retail brand to rely on this artificial intelligence. The flow developed allows us to optimize and speed up the entire process. The flow developed allows us to optimize and speed up the entire purchase process, from the initial planning to sending the products to stores. Amongst the significant gains, I'd highlight the increase of sales of products that were in stock and the reduction of unnecessary overstocks," said Bruno Ferreira. That's a very good point. When you're running a business and it happens to be a retail business and you're selling products, last thing you want to do is order a bunch of stock that you're probably not going to sell. If you have an algorithm, an AI artificial program that can predict or analyze your predicted sales, and it can help you manage your inventory, this can actually save you a lot of money and space and time. Time is money. Money is time. So you can obviously see that this kind of technology could really be helpful, not just to a fashion brand, but to multiple other brands, because the entire world is run on a form of e-commerce. The entire world is run on a form of retail. Everything we buy has to do with retail. And these companies, they always hold inventory. These companies always want to ship products from here to there. When these companies can understand that this is going to sell a lot more in this month, this won't sell that much, I need to ship this there, I need to ship this here. When you've got a program, an algorithm that can do this, and then you've got people working to manage that program just to oversee that there's no odd behaviors, there's no mistakes, there's always flaws in every system that need patches, need upgrading, need assistant. But nevertheless, this can save a lot of time. You know, there was a time when these numbers, we had to do them ourselves. But since computers have been getting so much more intelligent over the last 30, 40 years, we've delegated a lot of these work to computers. And computers are way better at doing these calculations that would take a room full of intelligent human beings, weeks, months, sometimes. It saves a lot of money as well. And sometimes it can be more accurate. And sometimes it can give you reasons on why it's making its particular decision. It's a particular analysis. It can give you explanations. So technology is the future, ladies and gents. So that's why I was thinking Pantera. I already like the idea of this company, you know, and I like the idea of other companies that make similar technology. Pantera deployed the Foundry software over a 3-month period, which allows C&A to reconcile many variables that impacted profitability, inventory planning, such as sales, seasonality. Yes, that's an important thing. People will always spend a lot more money in Christmas than they do in January and February. January and February, everyone is trying to make money. In December, Christmas time, holiday time, everyone is trying to spend money. And it might seem simple. Oh, like you can get a human being to do that. No, but when you get into the smaller products and smaller details, it really takes a computer to do it at a much faster rate and a bit more accurately, and at a much smaller cost to the company than hiring actual human beings to do this work. Now, as a result, they identified multiple options to improve their management of top-selling items, incorporating even new models. So we have another quote, explain Henrique Valea, head of Pantera, and I quote, "We form a digital twin of companies' logistic chains, giving the planning teams not only the complete view of the purchasing products, purchasing processes, but also the power to quickly simulate new rules and scenarios and thus prevent extreme situations." That's important because when you've got human beings doing this, there can be a lot of mistakes. And it can also be an extremely challenging task. How do you manage a company when you're managing so many different inventories? How do you manage the people who manage the inventory, who manage the products, who manage the shipments? It's a head scratcher. It can be very tiresome, very difficult. When you're running a retail business and you have to like manage some of these, oversee some of these products or oversee the logistic managers, you hire logistic managers to manage your warehouse inventory, to ship products from here to there. You oversee these things. You probably don't do it yourself, but you oversee it as the CEO. But what you start to realize is that when it gets to the smaller intricate details and you have thousands of different products, for a logistic manager, this can be an almost impossible job to get right. An AI system is much better at predicting these small number differences, and the AI can advise you to make the differences in changes to prevent any catastrophe and to always rise your earning and to lower your expenses. It's simple. So Pantera software is leveraged in critical supply chains across the world. Foundry, an AI-driven operation platform, can accelerate already established technology investments to unite disparate planning and execute functions, heighten inventory administrations, and bolster the reliance of supply chains in face of economics or geopolitical disturbance. Geopolitical disturbance is a real thing that a lot of business people do not consider seriously. And if you don't know much about it, research it. We're all learning here, and we all come here to learn, so might as well you research. I can only give you a piece of the puzzle. You have to figure out the rest for yourself. Not financial advice, by the way, but I hope you understand my analogy. It looks like we're already off to a good stable start. Like I said, around 25.9 billion in market cap. That is not to be underestimated. And in the last month, this is what it's looked like. Very stable and very progressive, and it's continued to rise in price. In the last month, it's had very few moments where the price is going downhill. I see one that's quite obvious, and that was just around the middle of May, 15th of May. Of course, we're still in May, but the price went down to around $9.15, but only for a brief period of time. So looking at the yearly forecast, this is what the company looks like in the last year. So around August last year is when it took a huge dip. It took an additional dip around December the 19th to $6.29. That's around half the price it is right now, almost half the price it is right now. What a moment. So kudos to everyone who bought at $6.29. Kudos to you. But looking at where the company is coming from, looking at around the IPO price, so it looks like around the initial IPO, it might have IPO'd around $9.20, but it looked like it quickly rose to around $35. But it looks like it's on its way back up to $15, $20, $25. And it's not showing a lot of weaknesses. It's not, to be honest. If you look at the last year, the lowest price that it's been is $9.29. It's not showing a lot of weak points. So if you bought at this price and it went down even further, you have confidence in knowing now we understand where the bottom is. It's around $6.29. So you understand what I mean? Not financial advice, but my point is that if you bought around this price, if I bought around this price and the price went down, I don't have to worry, because if it's cheaper, that just means I should buy more. I usually focus more on EV companies, but let me reassure you, I love technological companies, software companies, robotic companies. Robotics companies is one of my favorites. Technology companies, one of my favorites. That's all I've got to say for today, but it doesn't have a lot of weak points if I'm looking at the charts. You know, all I'm seeing is strong. And if I take a closer look at last year, December, when the stock market had a little bit of a dip, at its lowest price, it was around $6, half the price it is right now. If I bought right now and the price kept on going down, I just have to keep on buying more, because cheaper it gets, more I buy. Which means that the market cap was also around half what it is right now. So that must have been around 12 to $13 billion in market cap. And you can see it slowly but gradually went back up in price. That's impressive. Thank you for watching, subscribe, and I'll see you in the next one.